what is going on with gold? Is this just a knee-jerk reaction to the Fed minutes yesterday?
Well, certainly that's part of it, but we think there's a larger thematic going on, and that is the thematic that we think will be prominent in 2013, and that is cyclical exhaustion. You have fundamental cyclical exhaustion from investors, those who are interested in that gold trade. They are already in it. There don't seem to be too many others interested in there. And then exhaustion in terms of if we were to digest all of the QE that's in the system right now, we think that you should be at 2,500 or 3,000 on gold. So the gold trade seems to us a little bit tired here, and we would be avoiding it at this stage.
Lincoln, it may be exhausted, but the fact is there's still a lot of big questions to be answered. You know, coming up very soon is the debt ceiling. Don't investors still want to protect themselves against that, protect their wealth? I mean, isn't there room for a run for gold on that?
I don't think that I would suggest investors use gold as a hedging mechanism or a safety place in the debt ceiling conversation. I think that they would be much better served in some of the safer assets, maybe 10-year treasuries or 5-year notes, something along that line. Gold has tended to, in the crisis periods, not performed particularly well, and I would avoid it also in this debt ceiling negotiations.
Lincoln, so if you don't take your cues from what's happening in Washington, D.C., what about around the world? How are China and India demand playing into gold pricing?
It's a great question, and I think that given the potential for inflation scenarios in the emerging economies, that's another piece of why gold seems less attractive to us here, and that is that the inflation uptick in the emerging economies is going to put a crimp or a dampening on consumer consumption out of places like India and Southeast Asia, places that traditionally buy gold for things like weddings and babies and things of that nature.
So, Lincoln, you don't have a rosy outlook for gold fundamentally, but are you still a trader on it this year in the short term?
Yeah, look, I think the gold trade is exactly that, just a trade. We saw it trade off of the 1625 level, a shelf that it had built over the course of the summer last year, and that you have these kind of $50 increments. 1625 is potentially a $25 trading opportunity, then 1575 again for another $20, $25. And then if it breaks through that 1550 level, we probably wouldn't be interested in owning gold until maybe 1525, possibly even 1500.
Very quickly, Lincoln, what's your take on silver? Is it just taking its cue from gold, or is there something different going on in the silver market right now?
Well, it is taking its cue from the gold market, and it tends to exacerbate the moves both on the upside and the downside. We're not particularly fundamentally interested in silver. There isn't a particularly dramatic fundamental position there.